Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss positive economic data points, even though bond yields have moderated. And of course, that lended to the bullish action that we saw last week. And Phil, if we take a look at our first couple of charts here, we can see that the recovery is firmly in progress.
Yeah, and I think what's really important is with the retail surge, I mean, we kind of expected it because we knew that those $1,400 checks were going through the system, but where they're being spent, if you look at some of the credit card data, is really interesting. Airlines, clothing, department stores, hotels, restaurants, a lot of the segments of the economy that were really hurt by coronavirus. So it looks like people's spending patterns are starting to return back to normal, which is great for employment because the services sector, as we've discussed before, is still well below normal pre-COVID levels for employment. And that's where a lot of the employment is actually coming from.
Yeah, and we can see that jobless benefits, that data continues to improve as well. I mean, their lowest levels since the pandemic.
Still really elevated, but yeah, you can definitely start to see the jobless claims every week is coming down again. So as people are firing up more restaurants and hotel visits, we're starting to get people working back in those places as well. So it's a relatively positive sign. A lot of other data last week too was super positive on the US economy recovering. And that's why, to your point, it's kind of surprising that rates didn't actually go up because a lot of the data last week did look like sort of the data that you might expect to see if you were getting worried about overheating. A lot of people piling back into leisure activities before the companies have had a chance to rehire people into those roles, get them trained up. You potentially can start to see prices at airlines and hotels starting to spike just because there's not enough capacity at the moment.
And as a result, bond yields actually went down a bit, which is kind of unusual.
Yeah, totally unexpected. I guess maybe to a degree, the bond yields had gone up so much, the market's starting to really rethink, where should the 10-year be going forward? But also, the Fed's still very stubbornly saying that it's not going to move rates. It's going to wait for a broad-based recovery in unemployment. And so the market actually did come back down to below that 1.6% yield level on the 10 years. So the market sort of moderated its inflation expectations. We had an inflation print last week. It wasn't, it was high-ish, but it wasn't extreme. And I think that helped.
And to wrap up here with an update on COVID cases here, the progress is there's a little bit of a dispersion here, particularly when we look at the emerging markets.
Yeah, I mean, I think the story that we're seeing in America, where the vaccinations are getting through the economy, and they're starting to have a really positive impact on new cases, which are starting to fall pretty much around most of America, almost all states now. Deaths are down significantly. The same in a lot of other developed countries as well. So the developed world is starting to get over COVID, but what we're starting to see is the emerging countries are actually just starting to see another wave. India, Brazil, Turkey, some of the Eastern European countries are in lockdown. So the emerging economies could still be, I guess, a handbrake on growth for everybody, but also they're going to have a disproportionate lag in terms of their recovery from COVID compared to the developed markets. And that going forward, I guess, as most of the developed markets get back to normal, the story might start to pivot to the emerging markets, what that means for supply chains, and what it means for global health as well.
All right, Phil, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.